Welcome back to another recap video here at Harvey Bowes. Now you might notice slightly different surroundings. We are in lockdown, so I'm currently based at home. However, we thought we'd explain to you a couple of things today about what we're seeing in terms of inquiries and perhaps how this could benefit you. So we're seeing a lot of inquiries at the moment about bridging finance. Now historically, bridging finance has had a bit of a bad reputation for being quite expensive. However, everything has its place. And bridging can be an amazing way of helping you build your portfolio or even helping you get much faster finance to turn the property around to make it mortgageable in the long term. So we're going to look at 3 ways that you can use bridging finance today in order to help you progress with your property journey. So first of all, it's using it for purchase only. Now this means if you're just looking to buy a property with a bridging facility, you can expect to lend up to 75% of that loan to value. And you can do this on a term ranging from 6 months up to about 24 months. At the moment, current rates are between 0.65% per month and 1% per month. Now with a bridging loan, one of the things that we see by default a lot of the time is that the interest is rolled up to the beginning. So that means that when you take out the loan, however long you've got that term for, that interest is rolled up and paid at the very beginning on completion of that bridging loan. So if you've taken out a bridge for say 12 months, you would pay 12 months worth of interest payments at the very beginning. Where that is a bit of a disadvantage, obviously eats into your ultimate loan, but where that's a positive, you don't have any payments to make going forward for that 12-month period. So it can cash flow much easier doing it that way because all of your costs are paid at the beginning. You do also have the ability to service the loan. So this is affordability based, and some lenders will allow you to take a bridge and service that interest on a monthly basis. However, it does require that they look into the affordability to ensure that it suits you and that it suits their risk profile too. The second way to use bridging is by using it for purchase and for works. Now at the moment, I would say the happy medium is currently between 65 and 70% of the purchase and generally 100% of the works. Now this works money is paid in arrears. So that means if they're going to offer you up to 100% of the loan you require, this money will be paid upon production of an invoice and good proof that the work has been done to a satisfactory standard. So on a property worth, say 100,000 as a purchase, you could get between 65 and 70,000. If you was looking to refurb at a price of say 25,000, you could get up to 100% of that money paid back in arrears. Now the idea of doing this is that you're ultimately hoping that the value that you add is going to cause an increase or an uplift in the property value for when you come around to refinancing it. So what you're going to hope is that if a property costs 100,000 and you're going to spend £25,000 on the works, you're hoping that it's going to be worth 150,000 plus, so that you've made some money and then you can refinance with your term lender at a higher loan to value. Now this can work really nicely. Now generally speaking, as we said, it's all done in arrears. So your purchase fees will go up front first, but then if you are adding value doing those works, then you would traditionally pay for the first lot of works, provide the invoice and the proof that it's been completed, and you'll get that money back subject to any interest payments. You can then carry out the next portion of works and the system progresses until eventually you've added that value, you can take it to your term lender and then do your refinance. The third way of using a bridge is by looking at the open market value or trying to lend against the GDV or the gross development value. Now this is going to be slightly different from the second way that we just spoke about. What you're going to be looking to do is working out the purchase price, the works price, and then your final GDV. And you're going to do an open market value bridge based on that. So again, if the property is worth 100,000 to buy, you're going to put £25,000 into the works, and then you're hoping that the property is going to be worth 150. You're going to want to try to borrow up to 70 or 75% of that open market value. Now this means that it might be you get a bit more money in the early outset, so you can pay for that purchase with a bit more ease. But it then means that when all the work's completed and you got that uplifted value, when you go to your term lender, you can then again refinance. Now it might be that you don't take out as much money perhaps, but you can clear that loan and keep everything going on a term loan. Now, lenders are going to be very different. They've all got their own attitude towards risk. They've all got their own thought process behind everything. However, we at Harvey Bowes do have access to a huge panel of bridging lenders. So whatever you're looking to do, whether it is the purchase and the works, or an open market bridge against the overall GDV value, we have the ability to speak to the right lenders to pair them up with your needs. So if you found this video useful and you'd like to get in touch with us to find out how this can suit your goals, don't forget to give us a call on the number below, drop me an email, or even give us a visit on the website and get in touch that way. So I hope this has been of value to you today. I look forward to seeing you all again tomorrow. Have a great evening. See you soon.